good day, all. Ira Epstein, and I am out of town, so you're not going to see me in these videos for a little bit. I decided to get out of town, try to get rid of this cough by doing some relaxation in nice climate. I've done that, and we'll see what I can do with it. I'm reading about the COVID, how bad the cases are getting, and they're everywhere. All the talk this week that you're seeing in the stock market is going to now start centering around earnings. I did a piece for banks, and I was trying to explain on TikTok today for Bloomberg, basically that the earnings are going to be good X what the banks put away for reserves. So if you were to ask me how are they going to do on credit cards, I think great. How are they going to do between the spread between what they take in for deposits and pay interest on versus their lending rates? I think they're going to do good. The big unknown is what are they going to put away for reserves as the economy cools down? And I can't answer that. I don't think anybody can answer it, but it is a cause that we have to look at and try to figure out what's that going to mean. So where I'm at on that is it's earnings week. It's going to be hard to be anything but bearish. I believe that the corporate leaders are going to be conservative. I think they're going to talk about the concern of the dollar, the fact that the euro is knocking on the door of parity, the pound down to 119. You just got a lot of plays here that there's a lot of problems with. The only currency market that wants to be different is the yen, and how long can that last by them staying with an easy money policy. I'll finish up with Google and take a look tomorrow as I typically do on a Tuesday. Do I want to replace it and what do I want to do? But you can see the market's been working in steps, an up move, correction, another up move, a correction, and finally we got up where you took out that high and you went back to about where you were in the marketplace. Okay. When we look at the Swingline Study, and that's this study that you see right here with my cursor, you have a lower low and a higher high. That means there's no trend at work in the market at this point in time. The next chart, we look at the moving averages. And while the market did get up and over the 18-day average of closes, which gave the market an upside bias, it did it by making first a lower low and then a higher high. That is not a trend. We've just discussed that. One of the resistance points would be the 24.5826 level right here. That would be the 100-day average next to 200-day. And as we step into Bollinger Bands, you're there. So what I was telling you last week before I left for this week on vacation is the market should have that resistance point. Right through here, support back at the 18-day average of closes. When you look at the slow stochastic, you got overbought. So if you've taken my enhanced Bollinger Band course, you know that the first challenge of a Bollinger Band is where I tell professionals to come out of the market. Yeah, you might leave something on the table, but you're going to get most of the what I'll call the filet mignon. You're going to get the best piece of the meat that you can get out of the trade. There's other ways to get back in, but that's what I believe. Now in AMC, I'm not unimpressed with this. It's trying to move up. It's riding the upper Bollinger Band 3 days in a row, probably trying to get up right through here. It's had good reviews with Minions. Thor just came out. There'll be other big ones that come, and as I've said to you over and over, they have to make their money now. How high they go is going to tell me how much of a cushion they're going to have. Right now, I'm not overly impressed. I must tell you that. Long term, I'm bearish. Apple ran up and into the upper Bollinger Band here and here. Now it's backing away. We have earnings obviously all coming out. You know, it'll be stages that you get them, but you're not embedded. You have a market that hit these numbers in an overbought status. It could easily fall back to 138.76 for the support level. I do not tell my traders to buy overbought conditions. And in Disney, it just can't get out of its own way. It's still caught overall in the Bollinger Band, which is narrowed in dramatically. And this market just sort of drifting right here, not going anywhere, void of a trend. In the financial services, XLF, you're still in an uptrend. Now momentum is starting to flatten just a hair, but similar to what we just saw. Look at how the Bollinger Bands are narrowing in. We just saw that, if you will, in Disney. Now we're seeing that again in XLF. Okay, that's your battleground, the 18-day average. You lose the uptrend that you have if you take out this right here from July 5th to 31.02. Barring that, if the pros are buying, they're going to buy it right in here, I'm guessing, with stops under that 31.02 level. Looking for the upper Bollinger Band. In XLI, the same pattern. Look at how you've narrowed in. This makes trading these markets very difficult. You're capping how high or how low they can go when you narrow in like that. Narrowing in like this also leads to a big move ultimately as you wind in all the price pressures. In the semiconductors, I think this is the short sale area. This is where I think the pros are going short again. I think they'll bail if you get up and over 157.87, the high right here. This stays high. And I think their target's going to be 145.74. In XHB, the home builders, still looking pretty good. Now, home prices are slipping in different parts of the country. There's a lot of cancellations of homes. If you were reading the news today, you saw how many potential purchases have fallen through. And the reason, high mortgage rates, maybe something not right with the house, buyer's remorse. There's many things when you're buying this late into the cycle. But at the end of the day, you still don't have enough homes, and there's not enough coming online to get super bearish. You'd have to go into a real hard recession. That would scare the heck out of the housing market. With employment numbers the way they are and people able to get jobs that they want at good pay, I don't think that's the issue that we have right now. On the energy sector, problems. China's now talking more lockdowns. Macau gone into a lockdown. Now Wuhan, that is another problem. They just had a cholera outbreak there at one of the universities, but they are looking at problems. So what the market doesn't want to hear is that China's going to have more cases. You know that over the weekend they tested some 25 million people in Shanghai, supposedly. We'll get the results, and I'm sure they'll tell us there's 6 people that got sick. You know what I'm getting. I'm being facetious, but I don't know what they're going to tell us, and I don't never know what to believe from them. In any case, the fact that they're still getting these is not a bullish factor. You'll have an idea if energy pops through this high, there's something else brewing. This market seems to be caught between, is crude going to go back to $90 or is crude going up to 150? Is it more demand or the 90? I think President Biden's travel to Saudi Arabia this weekend is going to end up doing absolutely nothing. Saudis will give him a lot of lip service. Yes, sir. Yes, sir. We're going to do those. They're still underproducing. All of them are. They're not going to overproduce. They have the golden goose. They don't want the world to go into such a severe recession that it kills everything, but they don't want to break the prices too much. That's not in their best interest. They could, on big rallies, start producing more because their coffers will be filling even larger. That's how I view what's going on. Gold gets beaten up in inflation. I have people that don't believe that, and that's fine, but that's what's going on. It's not acting as your inflation hedge. It's not helping you in a recession. The market's down and the gold market's down. GDX, are we staying embedded? You do see this. Okay, the market has not lost it. So until it loses it, I say that the pros are selling these rallies. It began embedding all the way back here, and that's what they're doing, and they're pulling it in on breaks and putting it back out. Copper suddenly back down. Why? Because the market is scared to death of what China may or may not do if these outbreaks occur. In America, I know the new variant is picking up momentum. I may have caught that. I should have been tested to see which one I got with this bad throat. But as you can hear, I'm able to talk, and I haven't put this on pause yet. So I'm definitively getting better. It's just a long process. In any case, lower highs, lower lows, AGG, lower highs, lower lows, but over the 18-day average. You have the bias up, the trend is down. When you come to UUP, the dollar, it's just on a tear to the upside against its counterpart, FXE, which is on a complete drop. You just missed today getting under the 101 level. Parity, it's right around the corner. Sure, you can get it. You can get a short covering burst at any time, but not a trend change. The market's probably going well under parity. First time since what, 2002? So it's quite a move that you have there. You know, I want you to look at this. Starting tonight, I'm going to offer you a Prime Day sale. 50 off any of my research purchase subscription. So that's a subscription to my full research, written updates along with the morning video, the morning videos for the futures, the combo for the futures and the spider, or just the spider. It does not include my courses, but it does include all of my active monthly and yearly research programs. So to get this, all you have to do is go to our website, www.iraepstein.com, and that'll take you right where you have to go. We'll try to put on this particular video also in a minute or two here, where you can just take your cursor, move it all the way up to the top like I'm doing up there, and you'll see up here an icon. You'll give that icon a click, and away you go. The market should give you everything you need. I'm Ira Epstein. You have yourself a great day. I will talk to you later.